What is going on, everybody? Casualty Crypto here with another episode of the Casualty Crypto Report. I wish you guys all well wherever you are. Today is October 6, 2020, and this is a very interesting time for people in the Flamingo token space. If you are aware, or maybe you may not be aware of Flamingo Finance, they did their next stage of their project where they finally opened up liquidity pools and the swap functionality on the platform. If you have tokens staked on the Flamingo platform, you would have noticed that they haven't been generating Flamingo tokens since uh, since their transition time yesterday. And in order to continue minting more Flamingo tokens, you have to unstake your single tokens and pair them up with Flamingo tokens so that you qualify into the liquidity pools like Flamingo and Neo pair or like WBTC and Neo pair. And the way you do it is pretty simple. I mean, you just go to the swap page. If assuming you do have Flamingo token, you can press add liquidity to choose the pair that you want to provide liquidity to. So the most common one would be Neo with Flamingo token, and how much you put in is dependent on the price for both of those. So suppose you got about like 50 flamingos worth of tokens, then all you have to do is you just have to add in 1.1146 worth of Neo, and then you can press supply, and they'll say that you own about like whatever pool it is, and you'll earn liquidity pool tokens. And when you have those liquidity pool tokens, which are like receipts, right? Receipts that you have tokens stored with them, you can stake these liquidity pool tokens into the respective pool. So for if you got NEO and Flamingo tokens, you can put it into here, and you can see that they do have different APY rates for different levels, and it's really exciting to see that Flamingo token and Neo pair has about 671% APY. Is a lot, but also you do have to know that there is a risk involved when it comes to working in liquidity pool. Because when you are in a liquidity pool, you are shorting against volatility. You are betting that the market, the two tokens in the liquidity pool will not go up in value, and you're hoping that well, not just up, but up and down in value, and you are betting that it'll stay the same, such that when people do make swaps, you get a cut in the trading fees. So that is one risk you do have to know. And this 600% may not last that long because we do know that they are planning on moving on to the next phase, which is phase two, or at least week 3 of the Flamingo launch. And from there, they will nerf the amount of Flamingo tokens issue out by they'll nerf it up by about half. So right now you do get about 670% at this point, and in about a few days they'll nerf it down to about 300%, which is still pretty good if you compare to like the percentage you are getting on Binance, right? If you are like staking your like BNB or BUSD on Binance, you're getting only like 20% or 56%. It's very little compared to what you are getting here, but that's how they are. Uh, and the risk, and that is the reward for, I guess, taking a step outside of the safety of the Binance Central Exchange. And where do I think the price of Flamingo may head? You can see right here, um, from about like October 7th on, it'll drop down to 1 million from its original minting of about like 2.8 million. So about like 66%, almost 66%. So yeah, so this is if you still want, if you do believe in the future of Flamingo tokens, which they do have a lot of use cases, right? And here you can see that they do have a perpetuity contract, they have a swap, they have like a DAO, and they have a lot of functions. And this is this being the only neo based uh, def- DeFi platform. They have a lot of potential, but the question is whether you do believe in it or not. There is always a chance that they may not take off as great as well. Especially now that we are seeing more competition on the other chains, such as Binance chain, and of course, when ETH 2.0 does come out, it is going to change things up a lot too, because a lot of reason why people are moving to other chains is because of ETH network being clogged up. But only time will tell, and depending on how you play it, you may win big or you may get wrecked. So, or at least break even if you play it well. So it's always important to manage your risks and I know and yeah, diversify when you can. So in terms of the price of Flamingo, ever since the launch of the swap pool, you can see that Flamingo has changed trends, whereas it was in a descending pattern before. It was in a descending pattern for a while. It's been in a descending pattern for a while, and ever since of uh, the swap and liquidity pool, it did change a lot. Where it started going up. Whether this trend is going to be for stay or not, we will see in like we'll see in a bit, but this is somewhat of a good news for a lot of Flamingo token holders who do believe in the project. And of course, if you don't believe in the project, you are more than welcome to sell them like right after getting it. This is your crypto, this is your money, and you should be doing your own due diligence instead of taking actions just because some guy on YouTube is saying stuff. I'm not a financial advisor. None of the other YouTubers there are putting out information as financial advisors. We're just telling you what is happening out there in the crypto space. So remember to do your homework. Don't be lazy and own up to any mistakes you make. You got to put on your big boy pants. You shouldn't be like crying if you lose things. I mean, the crypto space is dangerous out there. It is the wild, wild west of crypto. Projects do come and go. If you saw my other video the other day, I was talking about how there's this Tron smart contract project that where you can see it go down in value, like in real time, and so it's always important to manage your risk, manage your directions. In terms of the pricing, I do feel that Flamingo has a chance of regaining its value. I would say that it probably will have to. It has quite a way to crawl back up. At least to around. I think just for starters, if they can get above like 56 cents, 57 cents, that's a good start because from a technical perspective, it did bounce a few times, and then after the drop, it tried to get up, but it couldn't get up above this line. So this line could be one resistance, and then afterwards, there may probably other resistance. It's still too early to do any technical analysis, but I do believe that Flamingo Finance, in terms of future, as long as people are minting the tokens, as long as people are getting tokens for free through Binance or through Flamingo Finance Vault, they'll always be dumping. Though I do believe that those who are mining them on the website are less likely to dump because you do have to jump through a couple hoops to get there. You have to put your tokens in a liquidity pool, which requires more skin in the game. And I do believe that those who are doing it are more likely to be in it for because they believe in the token more than being in it for the quick buck. And for that reason, I do believe that once the Binance pools have dried up, and it's just down to these pools, we will start seeing more price action. Given that nothing else will change. This is not personal advice. This is just my opinion. I could be wrong, and Flamingo could go somewhere, but I do think that in the long run it will go up. Especially when we do see the next bull run, which everybody's been keeping an eye out for. I would say that in the bull run, any coins will go up, but we'll have to see where it goes. So there you have it, just my price prediction and analysis. If you enjoyed this video, remember to like this video, press subscribe, and tick that little bell notification icon, because crypto space is always changing and it's always important to be on top of things, and this is why we exist as a channel. So thanks for watching, everybody. I'll see you in the next video. Peace and love, my friends. God bless.